Are you looking for ways to grow your wealth and achieve financial freedom? Welcome to a journey of discovery, where we unveil the power of assets in wealth creation. In this enlightening journey, we'll explore a diverse range of assets, from the tangibility of real estate to the virtual realms of websites and cryptocurrencies, and the intrinsic value of precious metals. There's an asset out there for everyone, regardless of your financial standing. So, without further ado, let's dive into the world of wealth-creating assets. First on our list is real estate, a timeless asset for wealth creation. This sector has been a reliable source of income for many, and its potential cannot be overstated. Investing in real estate opens up multiple avenues of income. The most obvious being rental income, an ongoing stream of cash that can cover your expenses and generate a profit. Over time, properties tend to appreciate in value, which means you can sell them for more than what you purchased them for. This appreciation can significantly boost your net worth. But that's not all. There are also tax advantages associated with real estate investment. From deductions on mortgage interest, property taxes, operating expenses, and depreciation, to potential tax-free capital gains, the tax code offers many benefits to real estate investors. In essence, real estate is a tangible asset that combines the potential for both income and growth. It can provide a steady cash flow while also increasing in value over time. To sum it up, real estate, a tangible asset that can provide both income and growth. Next up, we have stocks, a key player in the financial market. Now, investing in stocks is like buying a piece of a corporation. You're essentially placing a bet on the company's future success. If the company thrives, so does your investment. There are two main ways to make money from stocks. The first is through dividends. Some companies distribute a portion of their earnings to shareholders in the form of dividends. These can provide a steady stream of income, especially if you own a large number of shares. The second method is capital appreciation. If the company's value increases, the price of its stock rises. Sell your shares at this higher price, and you've made a profit. This is the principle of buy low, sell high. However, stocks are not without risks. Their value can fluctuate dramatically, and there's always the chance of a company underperforming or even going bankrupt. But with careful research and diversification, you can navigate these risks. Stocks, a volatile yet rewarding asset when navigated wisely. Moving on, we have bonds, a safer bet in the financial market. Bonds are like IOUs issued by entities, usually governments or corporations, with a promise to pay you back with interest. They serve as a steady source of income, often paying out twice a year. While they might not offer the high returns of riskier investments, their reliability makes them a valuable asset in any portfolio. It's all about balance, right? Bonds, a steady hand in an unpredictable market. Next, we introduce mutual funds, a collective investment scheme. It's like a financial potluck where investors pool their money together. The funds are then invested in a diverse range of assets, from stocks and bonds to real estate and commodities. This diversity helps to spread the risk. Plus, mutual funds are managed by financial professionals who make investment decisions on your behalf. So, you get the benefit of expert knowledge without the need for personal expertise. Mutual funds, spreading your risks while reaping rewards. Now let's talk about ETFs, a blend of mutual funds and stocks. ETFs, or exchange-traded funds, function much like mutual funds, pooling together assets, but with the added flexibility of being traded like stocks. This combination makes them a powerful tool for diversification, spreading your investments across a wide array of securities. They're also known for their low cost and high liquidity, making them easily accessible. ETFs providing the best of both worlds. Up next, we have index funds, a passive yet profitable investment. Index funds are a type of mutual fund designed to follow certain preset rules, so that the fund can track a specified basket of underlying investments. What makes them appealing? Their low fees and the potential for market-matching returns. You're not trying to beat the market with index funds, you're aiming to match it. And with the stock market's historical upward trend, that's a winning strategy. Index funds, a simple and effective way to invest. Now we move to precious metals, a hedge against inflation. These tangible assets, gold and silver, have been coveted for centuries as a store of wealth. Their inherent value does not erode over time, unlike paper currencies. When economies wobble, these metals shine brighter. Buying and holding precious metals can offer a sense of security, a financial insurance of sorts. So consider adding a dash of gold or a sprinkle of silver to your investment portfolio. Precious metals, a safe harbor in stormy economic times. Next is cryptocurrencies, the new age digital assets. In the world of finance, cryptocurrencies like Bitcoin and Ethereum have emerged as a potent force. They're virtual currencies, independent of traditional banking systems, which can offer substantial returns. However, they come with their own set of challenges, including high volatility. But with the right knowledge and a bit of caution, you can tap into their potential to amass considerable wealth. Cryptocurrencies, a digital leap towards future wealth. Moving on, we have websites, a virtual property with real income. Just like physical real estate, websites can be bought, sold, and rented out. Imagine owning a popular blog or e-commerce site that generates advertising or sales revenue while you sleep. The potential here is enormous. From affiliate marketing to subscription models, the options are endless. Remember, the internet never sleeps, and neither does your income from a well-managed site. Websites, a virtual asset for a digital age. Next, we introduce intellectual property, an asset of the mind. This unique asset class encompasses elements such as patents, trademarks, and copyrights. Patents protect inventions, trademarks safeguard brand identities, and copyrights guard original works of authorship. The value lies in their exclusivity. You could earn royalties from licensing your intellectual property or even sell it outright. It's a realm where creativity and innovation are truly rewarded. Intellectual property, harnessing the power of creativity and innovation. Last but not least, we have businesses, the cornerstone of wealth creation. There's no denying the significant potential that lies in owning a business. Whether you're launching a startup from scratch or acquiring an existing business, the possibilities for growth and income are vast. Imagine being at the helm of a thriving enterprise where the profits generated are a direct result of your decisions and management. From small local stores to expansive online platforms, businesses come in all shapes and sizes, each with unique advantages and opportunities. But remember, owning a business isn't just about the potential profits. It's about creating value, solving problems, and making a difference. It's about the freedom to shape your destiny, to take control of your financial future. And while it may involve risks and challenges, the rewards can be immensely fulfilling. Whether it's financial independence, job satisfaction, or the thrill of entrepreneurship, business ownership offers a path to wealth that's hard to match. Businesses, the epitome of wealth creation and financial freedom. So, there you have it, 12 powerful assets that can pave your path to wealth. We've journeyed through the landscapes of real estate, stocks, bonds, mutual funds, ETFs, and index funds. We've explored the glittering potential of precious metals, the digital frontier of cryptocurrencies, and the virtual real estate of websites. We've savored the creative rewards of intellectual property and the entrepreneurial opportunities of owning businesses. Each asset has its own unique charm and potential for growth, but remember, the key to a successful wealth-building strategy lies in diversification. Spreading your investments across these assets can help mitigate risk and maximize your returns. And let's not forget about risk management. It's crucial to understand the risks associated with each asset and to invest only what you can afford to lose. Remember, the journey to wealth is a marathon, not a sprint. Invest wisely and patiently. Your financial freedom is closer than you think.